Welcome everyone back to Pete's Investing. We look at our weekly review of some key market indices as well as gold. This gets updated every weekend and wrapping up the week's summary. This week we're looking at some mixed signals in our charts. Some are going well, some are going sideways, but overall our profits are doing quite well. And if you want me to review something in the future, whether it's an index, a commodity or a company, please let me know in the comments and I'll review it in a future video. As always, click on the subscribe button and notification bell and like this video to support the channel. First, let's go to our first rules in terms of the chart. This is our price chart, and we're looking at this over roughly a 5-month period. And this shows, and we're looking at a 15-minute bar chart. So this top chart shows a profitability. So we open up back here with the zero in our baseline balance is $100,000 and starts at zero here and looks at profitability over the 5-month period. This is our price chart, as I mentioned, and we're looking at the ASX here in this example. And this here is the CCI 100 chart indicator with our moving average 20 over the CCI 100. This shows how many contracts we've accumulated over the respective trades. And as you can see here, these are single trades, buying and selling out. And where these are stepping, these are showing that we bought 5 contracts here and added another 5 contracts here on our average down approach. There's another average down here. We bought 5 contracts here, average down here, and we sold out there at a profit. So that's our chart demonstration, how we read the charts. So let's look at the ASX 100 first and how it's performed over the week. As you can see here, it's since we entered back here, the chart has been moving sideways and consolidating in this area. So we haven't actually closed out where we bought our first 5 contracts here. It's been consolidating sideways ever since. So hold the fort there, and that shows the profitability since we closed last week. The profitability is down somewhat on that one. But overall, we're doing 3,952 for the 5 months. Let's first look at the profitability of the indices across the board. So 39.52 for the ASX, as we just mentioned, with the maximum drawdown, which looked at $1,600, and that drawdown looks like, so that would have been from the highest high, so it might have been from that point there to the lowest low there. So any one of these points from that high to that low would have been our maximum drawdown. So that's what that drawdown means in these respective numbers. The US 500, that produced $3,500 for the 5-month period with just over $1,000 drawdown. Germany produced $12,500, $2,500 in drawdown. The FTSE $5,000, so these are all in Aussie dollars, with $1,700 drawdown. China is the only one in the negative at the moment with $20,000 down, with $1,400 drawdown, and that hasn't been realised yet. So that's the maximum drawdown so far. And gold has produced $320. Now for each of these, we're trading 5 contracts. So again, looking at a 5-month period, 15-minute chart, we're trading 5 contracts, and these are the margins required per contract for each of these respectively. So again, looking back at the ASX for the week, and this goes back to the opening of the trade back here, around the 28th of June. It's been going sideways for the ASX. So looking at the US market, 28th of June, this is doing quite well. It closed out here early in the week on Tuesday, and it reopened again here. So that is opened, so it's realised another profit here. So the market has been appreciating since then, and we haven't closed this contract out yet, but it's probably due to close out again if this CCI 100 breaks below the zero. So again, our closing rules are we need to be in a profitable stage, and we need that moving average of the CCI 100 to close below the zero to be in a profitable stage before we close out the position. Otherwise, we remain open. So the US market's still going quite well at the moment, and we've realised $3,500 there for that, and that shows there the $3,500 for the 5-month period. Next, we look at Germany. Very similar to the ASX, that's been going sideways since around the 28th of June. So again, that position hasn't closed out yet. And that position has been open since early June here. You can see there the profitability in line with the price movement of the price chart. So again, we're not in profitable stage, so we haven't closed that out yet. Next, we look at the FTSE. That's been going in a sideways motion as well. And you can see there the profitability is 5,246 for the 5-month period. But that remains open because we're not in a profitable stage since we opened back here on the 18th of June. So again, that needs to break above our profitable stage before we close out. And that CCI, even though it's broken below this 0 line, we're not in a profitable stage, so we're not closing out as yet on the FTSE. Next, we look at the China market. This has been going down for some time, and we've been holding it for a number of months now. We've doubled up on our positions. We're holding currently, as you can see there. So we open up back here at the peak. It's dropped off quite a bit. It's dropped quite a bit, and it's been consolidating in this low range down here on this support level. So again, this is the one that's causing us the biggest grief. We'll keep holding on to that and accumulating. We've got 15 contracts so far. So we're down below our profitability of our baseline of 100,000 at 79,489. So hence we're looking at about $20,000 in a negative on the China market. Lastly, we look at gold. Again, since opening up back here, it's been going downwards, and it's making some progress up here lately. Although we're still in an open position, as you can see there, we're holding currently 10 positions, 10 contracts, after opening the initial contract entry back here. So we've doubled up down here, and that's been going sideways. So we're not in a profitable position, and it's not quite ready to sell out, so we'll hold on to that position. So in summary, this is what we've done for the 5-month period. All doing quite well, with the exception of the China market. So on average, or for total, we've got $5,000 for the 5-month period, which is just over $1,000 a month in terms of revenue. That's our summary for the week for the indices across these markets. Thanks again. Don't forget to subscribe, hit the notification bell, and hit the like button, and we'll see you guys in next week's review.